Stop everything, because what just happened in the oil market is one of the most textbook cases of institutional robbery I've ever seen, and almost nobody is talking about it correctly. In a single trading session, oil prices swung by $40 per barrel. We went from touching $120 a barrel, with headlines screaming 200 is next, all the way down into the mid-80s. A violent, brutal, historic wipeout. And the people holding the bag, retail investors, you, your friends, the people who believed what they were told. I'm May, this is what changes. And today, I'm going to show you exactly how this was engineered, who knew, when they knew it, and the data that proves the smart money was positioned long before a single shot was fired. Let me tell you the story they told you first. Operation Epic Fury. The Iran conflict. The Strait of Hormuz is shut down. 20% of the world's oil supply was choked off overnight. Iraq's output collapsed by 70%. Every major news outlet ran the same breathless headline: biggest supply disruption in history. Oil was going to $200. This was the moment. Buy now or miss it forever. And retail investors listened. They bought oil for $80, then 90, then over 100. Some of them leveraged up. Some of them put in money they couldn't afford to lose. Because the story made sense. The news was everywhere. The fear was real. But here's the thing about fear in markets. Fear is a product, and someone was selling it. While retail was panic buying, institutional money was doing the exact opposite. They were selling, aggressively. This is what's called buying the rumor, selling the news, and the data makes it undeniable. Back in January, WTI crude was sitting at $56 a barrel. By February 27th, the day before the war officially started, it had already climbed to $67. That's a 20% move before a single confirmed military strike, before any official announcement, before your news app sent you a single notification. Think about what that means. Someone knew. The institutions were already in, already positioned, already waiting for you. Retail. To show up and buy their bags at the top. They bought at 56, you bought at 110, and then they sold to you. And here's the thing, this isn't new. This is a pattern so consistent it should be taught in every finance class on earth. Look at every major Middle Eastern conflict over the last 20 years. Every single one follows the same script. Oil pumps hard on the rumor of war. Prices spike on fear and supply anxiety. Retail piles in chasing the move. Then the conflict actually begins, and prices dump every single time. The clearest example? The 2003 Iraq War. Oil prices spiked hard on supply concerns as the US was building toward invasion. The moment boots hit the ground, the US released its strategic reserves. Prices crashed immediately. The people who bought the fear lost. The people who understood the playbook made a fortune. History doesn't repeat, but it rhymes. And in commodities markets, it rhymes almost word for word. Now I want to show you something that should make your blood run cold. On a prediction market called Polymarket, a user placed a $32,000 bet predicting the exact start time of the military strikes hours before they happened. At the time, the odds of that outcome were sitting at 17%. A long shot, the kind of bet you only make if you know something nobody else does. That single bet paid out over $553,000. Let me be clear about what I'm saying. I'm not saying this proves anything legally. What I'm saying is, someone, somewhere, had information that markets did not, and they monetized it. And while that one person was getting rich on Polymarket, the institutions that had been buying oil since January were getting rich on WTI. Meanwhile, retail was buying at the top. This is the world we operate in. Information asymmetry is the game. And if you don't know who the mark is, it's you. Then came the news that finished it off. President Trump stated publicly that the conflict was moving much faster than the original 4 to 5 week timeline. He even floated the idea of the US directly taking control of the Strait of Hormuz, forcing it back open for global traffic. The supply disruption narrative started crumbling in real time. Then, the G7 energy ministries scheduled an emergency meeting to coordinate a massive release of global oil reserves. Multiple governments, moving in concert, to flood the market. And then, the kill shot. The US Energy Secretary confirmed the Strategic Petroleum Reserve has 400 million barrels ready to deploy. 400 million barrels. Enough to wipe out every single fear-based price premium that retail investors had just paid for. The moment that hit the wires, oil didn't drift lower, it collapsed. Because the entire trade, the entire reason oil was at 120, was fear of supply. And Washington just told the market, there is no supply problem we can't solve overnight. So let me put this together clearly, because this is the most important part. This was not a market accident. This was not a glitch. This was a coordinated wealth transfer from people who believe what they read to people who understood what was actually happening. Step 1. Institutions quietly accumulate oil positions starting in January, when it's trading at $56. Step 2. A war begins, or is anticipated, and the media goes wall-to-wall with supply disruption panic. Step 3. Retail investors pile in at $80, $90, $100, $110, chasing the narrative. Step 4. Institutional money sells directly into that retail demand at the top. Step 5. Strategic reserves flood the market. The fear premium evaporates, and oil crashes by $40. The institutions made money on the way up. They made money selling to you at the top. The only people who lost were the ones who believed the headline. And here's the brutal truth. This will happen again. It happens every cycle. The pattern is identical because human psychology is identical. Fear makes people act fast and think slow, and the people on the other side of your trade are counting on exactly that. What changes? The asset, the conflict, the headline. What never changes? The playbook. If you're watching the news and feeling urgency, stop. Ask yourself, who was positioned before this story broke? Who benefits from my panic right now? Because in markets, by the time you're afraid, the trade is usually already over. That's what this channel is for. We follow the money, not the narrative. Subscribe if you want to keep seeing what's actually happening behind the headlines. I'm May. This is What Changes.